Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Estée Lauder, can a new makeover hide the financial troubles? Latest financial results, Q2 2025. Estée Lauder has reported mixed results for the second quarter of fiscal year 2025. Revenue reached $4 billion, a 6% decline year-over-year, but better than the expected $3.97 billion. Earnings per share (EPS) came in at 62 cents, significantly beating the forecasted 32 cents, but the company still posted a net loss of $1.64 per share. Gross profit margin was 73.03%, a solid number, but net profit margin dropped to 7.31%, indicating weakening profitability. Total liabilities-to-assets ratio stands at 61.16%, highlighting high debt levels. Cash and profitability assessment. The company reported $324 million in net profit, an improvement compared to previous quarters. The quick ratio of just 0.87 signals potential liquidity issues in covering short-term liabilities. Market capitalization is $29.71 billion, meaning the company is still overvalued relative to its current earnings. Stock valuation and historical trends. Price to earnings, PE ratio is 76.19, an extremely high valuation compared to historical averages of 30 to 40. Stock price has dropped nearly 50% over the past year, making it one of the biggest losers in the luxury sector. Dividend yield is 3.19%, but given the financial struggles, it could be at risk. Trend and technical analysis. Current stock price is $82.77, with resistance at $82.79, suggesting that further upside may be difficult. Support is at $66.59, meaning a break below this level could lead to further declines. Capital is flowing out of the stock, indicating continued selling pressure. Macroeconomic factors and trade war impact. The U.S. economy is in a slowdown phase, which is unfavorable for luxury brands like Estée Lauder. Rising unemployment and declining consumer demand could further weaken sales in the coming months. The U.S.-China and U.S.-Mexico trade wars may negatively impact supply chains and production costs. Comparison to competitors. L'Oréal is expanding in the Asian market, where Estée Lauder is losing market share. Procter & Gamble is more resilient to economic cycles due to better product diversification. Chance of a short squeeze? There are not enough short positions to trigger a short squeeze, so a sudden rally is unlikely. Conclusion: buy or sell. Reasons to sell. The company is still financially struggling, and revenue growth is not translating into profitability. High debt levels and declining liquidity pose additional risks. The stock has rebounded in recent weeks, but further upside may be limited. Reasons to buy. Dividend yield of over 3% provides some protection against further declines. Potential restructuring and financial improvement in the second half of 2025. If margins improve, the stock could return to historical levels between $120 and $150. Finally, at this moment, selling appears to be the stronger option, but long-term investors might consider buying if the stock drops closer to $70 per share. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 Supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.